Hi, I am Anna. I come from www.ntvforex.com. Asia market. The race for the vaccine is on. http ntvforex.com news ID 5D50FD 7/21/2023 48:58 am. US equities were stronger Monday, S&P up 0.8%, following a similar rise in the STOXX 600. China SCSI 300 rose 3%. Vaccine optimism drove sentiment as 3 separate programs working on vaccines released positive trial data indicating immune responses and safe usage. So, the race is on. European leaders are inching towards an agreement on the EU Recovery Fund, with negotiations ongoing as I type. Those negotiations, initially scheduled for 2 days, have stretched into 4. However, that suggests a deal, at least on the size and the ratio of grants to loans, must be close. The size of the recovery fund will be impressive, so that's without question. But there could be a real test of sentient when the grants to loan ratio are divulged. Of course, everyone will use a donation, but it's not abundantly clear if there's a considerable demand for loans. The weekly ritual. In what's becoming a weekly ritual, after spending another midsummer weekend marinating in a COVID-19 toxic headline elixir, stocks initially slid only to be resuscitated, and more, after AstraZeneca's possible recession stopper in the form of an experimental COVID-19 vaccine produced an immune response in early-stage clinical trials in healthy volunteers. The long momentum trade took the market higher on Monday in a reversion of last week's action. I continue to believe AMZN, 7.9% on Monday, is the name to watch to set the tone for momentum and the at-home basket. There's no magical potion keeping the market afloat, even though the mystical vaccine will provide all systems go lift off when in the hands of all. And while the unrelenting optimistic news flow on COVID-19 treatments and cures will continue pique investor interest, markets are counting on QE and fiscal accommodation to buttress against the deteriorating data backdrop and economic disarticulation until the vaccine deal is sealed. With so much optimism built around a medical breakthrough, either COVID-19 will be treatable and vaccinated out of existence soon, or this stock market could be in a world of hurt. G10FX. Risk appetite has improved during the European session, mainly on hopes for an agreement on an EU recovery fund and positive results from the vaccine trial. But ebullience evident in risk on FX is somewhat tempered, perhaps because so many other issues remain in play, not least that the COVID-19 case count continues to climb. Signs of progress in EU negotiations over the recovery fund have sent Eurist higher. However, we haven't challenged the 2020 high of 1.1495 as the euro remains capped, pushed down by light profit-taking and impatience around the final deal. After a marathon weekend, one would assume that most of the summit good news is in the price. But since it will be a lengthy process for the funds to get doled out and probably years to see the economic impact, what matters most for FX is that the market perceives the ECB backstop to be unwavering and that European breakup risk is mute. A deal unequivocally does both, and this is where the euro has room to surge as policy discord has been at the heat of the euro struggles since its inception. Asia FX. In Asia FX, most pairs remain range-bound with little news flow to shift the needle and markets now pretty much pricing in the EU deal, though concerns over rising COVID-19 case counts continue to support the USD safe haven. Two currencies which have been underperforming for the last couple of weeks now, stick out again: THB and IDR. Both USD and USDR have printed higher in Asian and European trade amid protests in Thailand, alongside continued bond outflows and an expectation of more significant dividend-related flows this week in Indonesia. The Malaysian ringgit could test the 4.26 as oil prices remain relatively stable, trading within tight ranges and global risk sentiment improving on positive vaccine news. Although retail sales in China have been slow to pick up, that could change with Beijing lowering its COVID mobility alert levels, which should help Malaysian manufacturing exports in China. And with the stronger than expected China Q2 GDP, it does suggest commodity exporters like Malaysia should benefit. However, with reports that China has been selling oil out of storage to other local markets, it could limit oil price gains and cap the ringgit's appreciation. BNM backstop remains stable on the domestic front, and bond and FX markets are pricing in another rate cut, which could help bond flow. Gold. Rising COVID-19 case counts, which means more stimulus and a weaker US dollar, always seems to do the trick for gold, which tested year highs overnight. But the anchors remain robust as the underlying support structure for gold remains intact. Negative real interest rates, ballooning central bank balance sheets, ongoing increases in COVID-19 cases and geopolitical risks boost safe haven and quality asset demand for gold. Silver has rallied more recently for many of the same reasons, but has also by benefiting from a rise in industrial demand. Gains in copper and iron ore, which often lend aid to silver, have helped as well. Silver is now leading the charge. So far, silver continues to follow the exact path it took in 2008-2009. The time dimension has been compressed, but the road and levels are pretty much the same. Crisis hits, liquidity dries up, and the precious metals get smoked as the dash for cash spared no asset class. Fed starts the massive easing campaign. Silver has now recovered all the pre-COVID losses. We're here now. Does silver hit $50 as it did in 1980 and 2011 highs? Subscribe our channel to receive the news as soon as possible. Thank you for watching.